Hey everybody, Trendy John here from Simpler Trading. Hope everyone is doing well. Today is April the 6th, 2025. We'll be covering this week's broad market analysis, covering tonight futures open again 5 o'clock Central Time here where I live in Florida, and we'll be covering up into the 11th of April. Let's go ahead and get started with this. Before we get started, please just take a few seconds to go ahead and hit that like button and share with any friends and family who may be interested in what's going on in the market. I'm sure a lot of people are interested. They want to know what is going on, and there's a lot of noise out there, folks. Remember, I am a professional supply and demand trader. My job is to identify levels where I'm looking for bigger turns in the market and then align myself with those turns. So, the first thing we are going to start with this week is going to be our US economic calendar. All right, let's go ahead and take a look over here. And this week's major U.S. economic reports and Fed speakers, you can see it's pretty. I wouldn't say that it's crazy, but we do have a lot of information coming out this week. And remember, all of this is just a catalyst that pushes price to supply and demand. So we're starting off here on April the 7th, which is tomorrow. We have Fed Governor Adriana Kugler speaks, and then consumer credit. Again, these are going to create some volatility in the market, so just be aware of the events. Tuesday, April the 8th, we have NFIB Optimism Index and then San Francisco Fed President Mary speaking. And then on Wednesday, we have Richmond Fed President Tom Barkin. And then we have minutes coming out from Fed's March FOMC meeting. Thursday, initial jobless claims, consumer price index, core CPI, and then a lot of Fed heads speaking here as well. And then coming in on Friday, we have core PPI, and then again, consumer sentiment, and then a couple Fed heads speaking. The next thing that I want to be looking at and what I'm excited about is going to be this week's earnings. All right. And so basically, what I do is I come out on Twitter or X, my apologies, and I like to use what is called earning whispers. I'm going to show you guys that real quick. And I come over here, just kind of scroll down. There's a lot of great information here, but you guys can see this is this week's calendar. Now, last week we had our next session, I guess, our class that I held on earnings. And our first trade, we had already taken it and we were able to capitalize that on Friday. And that was JPM. We shorted JPM into a demand zone. Which paid very, very nicely. And then we went ahead and bought some call debit spreads for a lot further out. So I'd like to see what's going to happen there. As far as anything else reporting, I'm not overly excited about anything on the list for this week. Perhaps Wells Fargo, all right, or Morgan Stanley. I think we get a lot busier next week into earnings where we'll see Goldman Sachs and all the bigger names, okay? So, anyways, that's what we got going on for this week. And let's go ahead and scroll down. Next thing that we want to be looking at is the bigger picture. I like to use TradingView for this. And this is the quarterly chart. And this is a really exciting time for me, believe it or not. I've been waiting for this level for a very long time. Now, when I first started this year, I was very, I guess you could say, cautious because we were very extended. And over the several months, I feel like it's been a good year that I've been saying, hey, price needs to come back to this quarterly 9 EMA because when I would go back and look at it, it's been absolutely forever, it felt like, since we had come back and tested it. Well, now here we are, right? And not only did we test it, we actually broke down just a little bit more in it. I have a couple notes on this quarterly, so let's go ahead and read those. A solid pullback to the 9 EMA. This is the level I talked about since last year. I started tier 2 of some of my leaps, not all of them, but probably half of them. There is still a zone lower, so I want to be really careful. And again, not over allocating, still really heavy on cash because I have this structure here. And there is a possibility we could be moving down into this lower zone between 460 to 395. And it could be even lower than that. So again, just want to be really, really patient. If for some reason we get a sizable bounce out of the 9 EMA, then most likely what I'll do is of the tier 2 leaps that I have added, I will most likely take those profits off if the SPY rebounds and gets some kind of relief bounce up towards 530 to 550. Okay. Now, let's Let's see. I would expect tariff discussion to go on for weeks to months to cause more volatility. All bounces are considered relief bounces until proven otherwise. Basically, what I'm saying there is we're stuck under a lot of resistance. And in the case that we were to bounce, so market kind of looks like this. If we go ahead and locate our anchor points for a Fibonacci, when I'm talking about a relief bounce, typically it's only going to bounce about 23.6 to 38.2%, which comes in about right there. And then we start to see a rollover again. And this is what we call an H formation. All right. So relief bounce until proven otherwise. In order for that relief bounce, let's say we open up tonight and we happen to gap up, it would not be anything to be bullish about unless we were to start to again start to close over that 547 550 area, which is right now the 38.2. If we gap down, again, I'm looking for price to most likely push down towards this inside and up formation on the quarterly chart. Okay, so that's what we have on the bigger picture. And again, that is just the quarterly chart there. The next thing that I want to show you is the SPY on Thinkorswim. This is a weekly chart, not a quarterly. And let's just kind of see what's happened so far. So I'm taking and I'm anchoring my Fibonacci's from this low to this high. You guys have seen, or sorry, you can see that prices pull back more than 50% of this rally, and we're getting close to the golden Fibonacci. So what does that mean? It means where I anchored this trend, believe it or not, even though it looks really ugly, is not broken until price can close up underneath the 618. Now, you'll notice when we look at this as well, that, like I said, we have a trendy edge under here. We have the 618. So my two major levels are going to be this week, 512. So if we get back above there, things look a little bit better. Or if we continue to push down here, 489 into this trendy edge is around 482. Okay. So very, very important to take a look at that. And I apologize. Let me get into my right chart here. There we go. There's the daily. All right. And this is what it looks like as well. Nice. I mean, there's a lot of divergence between price and the 9 EMA. The issue is what I'm seeing is a lot of times when you have this divergence, we'd get a nice sizable bounce back up to that mean, if you will, and then see a rollover. But on the last two sessions where we've had pretty deep corrections, they price is what they're doing is they're chopping it for several hours. This allows the 9 EMA to catch up with price, so you don't really have that divergence. So a lot of times when I see divergence, I get excited because I'm thinking, a big bounce. But when they chop it, this tends to come down lower, and then you realize like, we really don't have a lot of divergence anymore. So we could just roll back over and keep, moving lower. So just keep your eye on it. You guys could see we're under the 200 SMA, the 50, all that kind of good stuff. Possible, you could see this 50 starting to come to the downside, could cross. We'll take a look and see if that happens. Other than that, again, we're coming close into some support. If we were to gap down tonight, for me personally, I'd be looking for it to bounce around 489 to 481. We closed at 505, so that'd be a pretty meaningful gap down if we could get down into this level. One thing that I want to remind everybody, made several videos over the year, that this was the level that really told us to be cautious once we broke down. Now, in saying that, although being cautious doesn't mean that I full port like on the put side. I don't think a lot of people could see, 350 points down in the S&P in one day. Like it's been pretty impressive. And I think a lot of people are looking for that capitulation event last week. And that 7% is when we get that first halt. And if you notice, like on Friday, they pulled us all the way back to like 6 point something. And it's almost like it felt throttled. They didn't want that to happen, right before the weekend. It just didn't really make any sense to me. But it still hurts. Nice sizable correction so far. I'm hearing a lot of things, that were into bear territory. So again, it all depends on what your and how you measure trend. For me, folks, like when I look at something like this, you guys could see this looks pretty normal. Um, the move down itself, depending on what you want to measure. Again, we are right here on the banners, nice and red. So we are in a bearish trend. Okay, definitely in a bearish trend. So pay attention to your overall banners up here to the upside. Okay, so again, what does that mean? It means we could see relief rounds bounces, but they are relief bounces until proven otherwise. It's not until you can break above the 618 of the actual draw down. So, like for example, let's just say we got a meaningful bounce tonight, all right, and we were to draw these fibs from here to here. It would not be broken until we get above 572. And if you notice, right before the 618, right here in the golden pocket, which is the 50 and the 618, we have a nice supply zone. All right, so kind of stuck under supply for a while, folks. So again, relief bounces till proven otherwise. Our next chart that we're going to look at on the bigger picture is going to be the Qs. It's pretty much the same way. So if we come over here to the quarterly, we finally came back to the 9 EMA. This is be the first spot that I'd be looking for a meaningful balance, but yet again, we still have structure to the downside. And my note's pretty straightforward. Price has now returned to the quarterly 9 EMA. This is the first major level that I would expect some sort of meaningful bounce. Keep in mind there's still structure below, around 388 to 300. It's really wide. Any bounce will be considered a relief bounce until proven otherwise. Again, everyone, every time prices come back to this 9 EMA, not every single time, but for many, many years, since about 2010, it has always worked for a very meaningful bounce. Notice here when we pulled back in 2022, it dug in pretty deep. All right. So it dug in pretty deep. And, if you were to go back and go, okay, well, it touched here, we got that meaningful bounce, came back. This was kind of like your sign that was like, okay, eh, now it's coming back. It's probably weaker. And then it definitely gets more weak. It comes back in, it comes to the next EMA and then bounces. But if we look here, what I what I want to show you is that the demand zone and the structure and this EMA here are all confluent with this level. So very, very important to understand that. And let's just see if there's any kind of Fibonacci confluence. I'm going to measure from that candle to here, and let's just see what we have. And let's go up to the high. Yeah, so I mean, look at this zone. And now we have all sorts of confluence. We have structure, right? We had that next EMA I talked about, and now we have the 618. So this trend measuring from here to here is not broken unless we close under here, but the chances of closing under all of this are pretty slim considering all of the different levels that all have confluence there. Okay, so just something to think about. If we do continue down, this would be a nice area to perhaps, there'd be a lot of fear. Obviously, the extreme in fear is at 4, right? So it's down there, and we'll go over that here in a few minutes. But anyways, I really love this level. With bank earnings coming in, it's interesting. It's like, does the market get any sort of just sort of chop until we figure out what's coming into these quarterly earnings? So it's all very, very interesting. Let's go ahead and move on. Now we'll look at Think or Swim again and look at the Qs. Take a look and see what we have here as far as the weekly is concerned. So far as the week is concerned, on the QQQ, taking this measurement here to here, we are actually at the 618. We're at a zone. Our major levels for this week are going to be this entire zone right here, and then the 50, which is around 443. Okay, and right there we do have a supply zone that has been created on the weekly. Okay, so right there. So you can see that this would actually be some nice trading range into the quarterly earnings. And then after that, figure out, hey, does the market want to go lower or does it actually break above this supply zone, right? All right, so that is the Qs. Let's go into TradingView once again. We're going to take a look at the dollar. That's going to be TNX. We did hit our major level that I've been updating with you for several months now. Two major levels were 1015 and 107.5. And your update for this week is that we did come into the 101.5, and then we bounce. Sorry about that. I put the Treasury in there. There we go. So 101.5. Okay. You guys can see we came right back to that demand zone. Got a little light bounce there. Resistance up here around the 105. Those are going to remain my major levels. So 101.5 and then going to be 107.5. Basically, in this entire area for the dollar, I would expect it to bounce, but resistance does come in around 105. Okay. All right. TNX 10-year Treasury. All right, so I've been looking for 3.8 into June, July, but it looks like it's going to come probably a little bit sooner. I would expect it to bounce if we come into here, so just know that. Your major levels, 3.8 to 3.4, that's going to be a demand zone. And then your resistance coming in here is going to be up here towards this structure, which comes in around 4.2 to 4.5. Major levels remain the same, 5.005 in this zone right down here. Okay. All right. Just remember this is a key indicator of market expectations for interest rates and economic conditions. When the yield rises, it reflects higher rates. When it falls, it reflects lower rates. Let's move on. Let's get into the skew. Now, I have to tell you, I'm actually shocked about the skew this week. I really thought we would see this underneath here. It's not really adding up or making sense to me. Not a big deal. Don't want to put too much emphasis on it, but it is strange to me that we're still around 136. I thought I was going to open this up and find us underneath here finally. This was the levels that we have not seen in about 2 years. Matter of fact, since the last time we were there was January 2023. It's been over 2 years. This is where we usually see a huge move to the upside in the market. It's just a matter of time. It's not if, it's when. And I was expecting us to be down here. And that way, if the market pull back even more, I'd start getting super excited. So since we're up here, it makes me feel like there's still a lot of room to create a lot more fear, if that makes any sense. So this week will be interesting. If we do close under here, I do think we end up coming back to here. And this will probably be my spot that I really want to start. You'll notice I'll start allocating more money to probably shorter term positions, not necessarily just adding into my leaps, but I'll take a shot down here for the market to have a really nice rip and rally to the upside if we get down here. Okay. Speaking about that, remember, guys, the skew is just an index. Kind of helps me adjust my portfolio. Um, it's a useful tool for gauging market sentiment and potential risks. It's one of many indicators that I use and should not be used in isolation for making trading decisions, but rather just in conjunction with other market analysis and indicators. As far as what I see is what I just explained to you. There is an opportunity for the market to get a lot more fearful, is my point. So we haven't seen these levels in 2 years. I'm thinking to myself right now, why in the hell would we not see these levels here shortly if things aren't going to move up in the overall market? Okay. Next thing, I spoke about the fear and the greed. You guys can see it here. It's at 4. It's been a long time since I've seen it this low. So again, meaning that the majority of participants are either on the put side or just scared and their money's out of the market. So yeah, that's what's going on there. Futures, let's go ahead and talk about that. ES futures, we're going to start over here. All right, let's start with the weekly. And this is what it looks like. Looks a lot like the SPY, right? There we go. Got a new supply zone. Prices have pushed down. We're close to the 50 and the 618. We are in some structure, but that structure has been tested. Therefore, we have made a lower low inside the demand zone. And there's a possibility, again, that we can move down towards the 4,900 level. The trendy edge is also down here at around 48.56. So 48.56, 50.96. Yeah, you're talking another good 200 points here, guys. So it is definitely possible. I would prefer a nice quick flush, but instead of this, I feel like they need to rip the band-aid off if they're going to do it. I hate to sound like a broken record, but I do feel like we're at another level where we could see some sort of relief bounce. But just remember, it is a relief bounce until proven otherwise. Okay. Overall sentiment is bearish, but I'm always open to buying at dips for intraday type trades. I'm going to move down here now and go to the daily. Yeah, give me 1 second here. There we go, right there. I feel like I don't have enough time on here. There we go. Let's do this. There we go. All right, sorry about that. All right, one thing I wanted to show on this chart, which was interesting. So each one of these arrows, these blue lines, are all the same size. So in these meaningful corrections, I went back and took a look. They all measure exactly the same. And what I thought was interesting is if we were to take these two pullbacks, so from this point to down here, if we were to take in this point from here to here, if we were to add that right there, that puts us right at the trendy edge. So again, around 48 and a half. So there's a good possibility this would be an equal measured move and a possible bounce, which again is super confluent with my overall strategy. And I'd be looking for a bounce around there. So if we gap down for some reason tonight at 200 plus points and we're around here, I'm going to be looking for signs to buy the dip tonight. And again, when I say that, it could be I could be in a trade for 5 minutes just off the futures, or I simply trade it and see if it's a meaningful bounce into the morning. The way that I'm probably going to trade this if we gap down into that level is I'm going to buy ES options, not the straight up contracts. All right, so that's not going to be alerted into the room, but I want to give you my plan. I would be looking to buy out of the money because I'm not willing to put the high delta on right now with the lack of follow through to the upside. But I've done really well trading the ES put options. They've actually done really well and helped me at least take um, some of the pressure off of some of my long term unrealized losses. So, anyways, if we were to gap down into there, I'm looking at buying ES options to the upside. I'd probably buy 100 points out of the money and see if we can get a really nice bounce. So, again, that level is down here towards that 48 and a half. All right. All right, next one is a 4 hour. These 4 hour zones have been getting crushed. They bounce for a few seconds, minutes, couple hours, and then boom, they just kind of melt right through them. So again, these are smaller zones, so just realize they don't always work as well, especially because it's sort of counter trend, right? So we have red banners but smaller zones. So again, don't expect a whole lot from it. But just like everything else, there's a little bit of divergence here. We could set ourselves up for a nice bounce if we get it. All right. Let's go over into the NASDAQ, and it's going to be exactly the same way. Overall bearish setup, if you will, but we are getting close to a lot of confluence. Notice the NASDAQ typically leads to my levels. So in this case, the NASDAQ is very close to this demand zone. It is very close to the trendy edge. We still have structure below that as well that I showed you on the quarterly chart earlier. But as far as this is concerned, it is bearish because of the banners, because of overall trend, but we are close to a level where we could see a relief bounce. If for some reason we gap down and we don't gap through the green zone and we reclaim the trendy edge down here tonight, then I would be looking for a nice little bounce. Now, I'm not going to play the NASDAQ. I'm going to play the ES futures as I said earlier. Okay. Let's go ahead and go over here to the daily. Same thing. Here are my levels and these are my triggers. And again, guys, we don't blindly trade the trigger, but I do teach a process to get long or short. If we come up into these levels, they work really, really well. And if you want to learn about that, you can learn about it right here in the room. All right, let's go ahead and move on to the 4 hour. This 4 hour has been tested. It looks a lot like the ES futures. Um, I like the yearly edge just because it's a little bit lower. We'll see how these react when the market opens tonight. Same thing, we created another 4 hour supply zone up above. So please, please take note there as well. Last thing I want to be looking at is going to be Bitcoin. Now, last time I did check Bitcoin here on Robinhood, it was down quite a bit. Let me look. Yeah, so at the moment it's down about 3,500 points, which to me kind of signals that the market's going to gap down, but I don't know. We'll see. Um, but Bitcoin, my focus right now is going to be on this monthly. Notice how it's sitting on the 9. Now, far as Robinhood says, it's showing that it is at 80,000, I believe. Give me one second. Yeah, 80,000. So if it's at 80,000 right now, it's still sitting right around this 9 EMA or so. Underneath that, again, I think we're headed back to 64 if we can't maintain some kind of value above this low that we had last month. So if we take out that low, I think we are headed down to 64. You might want to look at shorting some stuff that is related. But as of right now, if it can hold the 9 EMA and hold this low, I would leave it alone and let it just kind of be noisy for a little while. Okay. Overall, guys, it's been a crazy couple weeks. I think that again, it's been extreme. Where I want to be focusing is adding into my plan, and I try to stick to my plan. And then, far as like intraday trading, it's going to be futures, SPX. Like that's my focus. And every once in a while, try and take a trade, smaller trades, very small, compared to my account size. I'll take smaller trades trying to buy the dip. That's because, some people may ask, well, why buy the dip? I mean, we've been buying the dip for many, many years. And we just try, right? We're traders. We try at levels. We're not going to try just because, like, oh, hey, the market's down. I'm just going to take a long. If I'm going to try, it's going to be at a level. We'll see if it works. I'll take it small, long-term positions, guys. I still have ideas where I want to layer into my tier three. But for now, my overall sentiment is bearish until proven otherwise. And for any bounce, it's a relief bounce. I can't wait to see you guys tomorrow, 30 minutes before the market opens. You guys have a wonderful rest of your weekend, and let's get to it. Have a good day.